Okay, why don't we go ahead and get started. Welcome everyone, and on behalf of FrontierView, thank you for joining our webinar series. On today's webcast, we'll be discussing the outlook for global tourism in 2021. My name is Richard Leggett, and I'm the CEO of FrontierView, and I'll be moderating this discussion. I'm delighted today to be joined by Martina Bozagieva, FrontierView's head of research. Martina and I would like this to be a highly interactive discussion, so please be sure to click on the Q&A box on the right-hand side of your screen and send your questions to FrontierView webinars, and we'll work to get as many questions as we can in the discussion as we walk through it. Also, as a reminder, if you are a client, you can access Martina's research and all of our market intelligence research and data on your FrontierView desktop and mobile application simply by logging on. If you are not a client, for registered attendees of this webinar, we're offering complimentary trial access to FrontierView. To take advantage of this offer, please request a trial in the comment box or visit our website at www.frontierview.com and click the request trial button. Before we get started, I realize that some of you may be new to FrontierView, so I'd like to take a minute to provide you with a quick overview of our firm and how we support multinational executives. FrontierView is a premier global market intelligence and advisory firm. Our primary focus is on serving the market intelligence needs of global business professionals at multinational corporations by providing and informing their market monitoring, strategic planning, and international growth priorities. From the beginning, we built FrontierView to be different in three primary ways. First, our product and service model has been purpose-built to serve a global business audience. In every aspect of our work, we strive to separate signal from noise and answer what we call the so what, now what questions that are unique to the international business professional. The second differentiator is our model. We call this strategic intelligence as a service. FrontierView is the only market intelligence solution that bundles together information resources, analyst advisory access, and senior executive network and community events. And finally, we are especially proud of our world-class technology. This powers the FrontierView desktop and mobile application and has been built with the sole purpose of informing our clients' workflows and decision processes. We're also incredibly proud of our client base. Today, it includes a community of over 4,000 global business professionals and is growing rapidly. Some of these companies you can see here on the slide. And again, if you're not a client and are interested in receiving trial access to our FrontierView program, please visit our website and click the request trial button. Now, having briefly introduced our company, I'd like to take a moment to introduce our presenter. Many of you know Martina, but for those of you that don't, Martina is a member of the senior executive team at FrontierView, and she leads our global research team, which consists of practices that are dedicated to Asia Pacific, Latin America, Western Europe, Central and Eastern Europe, Middle East Africa, North America, global economics, and global healthcare. In other words, Martina's quite busy. Martina, thanks for joining today's discussion.
Thanks for having me, Rich, and thank you everybody for joining us.
The tourism industry has been one of the most drastically impacted by COVID-19 globally. The implications to multinationals from this reduction are very widespread, and it includes a number of domestic markets through job losses and consumer spending reductions, as well as a wide range of industries, including airlines and hotels, but also their entire ecosystems, as well as travel, retail, and countless others. And just to kind of tee this up for context, to put in perspective, according to the World Travel and Tourism Council, in 2019, the indirect, direct, and induced impact of tourism globally accounted for 10% of the global GDP and 330 million jobs. So that's kind of a little bit of table setting of the magnitude of what we're talking about today. Now, we have some vaccines in sight. In fact, we got really good news this morning, just before we got on this webinar, and that provides some light at the end of the tunnel. So I think the timing for this discussion couldn't be better. And so, Martina, in that spirit, I'd like to break our discussion into several topics. I think we'll start with just where are we right now and how have different regions globally been affected in terms of tourism. And then secondly, we'll talk about, are there big differences as it relates to domestic tourism? And then third, we should talk about the outlook and what is the outlook for recovery and the timing for recovery in tourism by geographic regions as well as by the type of tourism. And then we'll wrap up with discussion of how the implications of all of this plays out for multinationals of our findings. Does that sound like a good program?
Sounds great. Thanks, Rich.
All right, as I like to say, that's a lot of wood to chop in 50 minutes. But let's get started. And as a reminder, please do ask questions, and as we go through, and we'll try to weave those in as well. All right, so why don't we get started, Martina? From a global perspective, which parts of the world have seen the biggest drops in terms of tourism this year?
So tourism, especially international tourism, has dropped off drastically in most parts of the world. It has been affected by how second waves have developed. So during the course of Q2 this year in particular, you will have seen tourism grind to essentially a halt in most global regions, improving a little bit in the summer in certain locations, which we can talk about in a moment. And then we've seen a slowdown essentially since September, since we've seen some of the second waves really starting to pop up around the world as well. But this is completely unprecedented. It is essentially an industry that is currently on hold or obliterated due to a combination of travel restrictions, fear, as well as structural issues preventing people from traveling internationally. So the impact has been very dramatic around the world. And that is going to also have an impact on how quickly we see a recovery further down the line.
Now, Martina, we've seen in Asia in particular, it's been a region that's been most effective in containing the spread of COVID-19 so far. Has that meant that the upside for tourism is higher there and will be higher there first?
Interesting. So Asia, paradoxically, but when you look at the facts, it makes a lot of sense, has seen one of the most sustained and deepest drops in tourism, right? So if you're looking at the data here, what you're seeing is essentially almost 0% tourism happening across, in particular, Northeast Asia and parts of Southeast Asia as well. This is also one of the reasons why we have seen a better management of COVID-19 across that region. We saw travel restrictions imposed really quickly and really early across markets from Taiwan and Japan or South Korea, certainly China as well. And these have remained in place even as a number of these markets have demonstrated reasonably good management of COVID-19. But part of the reason why they have been able to stay reasonably virus-free is because of those travel restrictions. So while in terms of are the countries safe to travel to, they are, the governments have been extremely cautious about allowing tourism in. And that is likely to continue to be the case for a while until they feel that it is safe to allow individuals to travel from their various locations. There are discussions around travel bubbles across, or green corridors across Asia, but these haven't taken off quite as much as you might expect them to, given the actual pandemic dynamics within individual markets, which tells us that the cost of effective management in some cases across Asia is also the reason why tourism is going to be under quite a lot of pressure there still for a while.
Okay, let's turn. We'll continue our kind of tour around. Let's turn to Europe for a second, which Europe it looked like was had things under control, recovering during the summer, and then we saw the next wave break out, and that kind of led the United States' next wave by several weeks. How does this play out in terms of derailing the recovery in tourism and travel that we were seeing in the region, and how does that play out maybe a little bit over time?
Yes, so the Europe picture is quite interesting because so much travel within Europe is from one European market to another European market. And this year, when we had the height of the lockdown in Q2, there were travel restrictions that essentially closed borders, which is extremely unusual given kind of the principles of the European Union and the freedom of travel across the region. That it was still less restrictive than what you have seen in Asia, for example, much less so. And what we saw during the summer is actually a bit of an improvement in terms of travel across Europe. Clearly, some people traveled, some people for holidays, some people to see family across the continent. So there was a little bit of an uptick, certainly not getting back to normal, but improvement in terms of travel volumes. And since September, if you look at the most recent data, September, October data is showing another dip. And that is due to a combination of factors. First, starting with the change in weather and the holidays, but also more recently with the uptick in cases across Europe. So that tells us winter holidays are not going to be a really big thing in terms of driving tourism for Europe this year. And governments are likely to remain a little bit more cautious about reopening to tourists, at least probably going into Q1 this year. But again, those restrictions are mostly due to quarantine requirements or the requirement to show that you have taken a negative COVID test. They are not the same as closed borders as what you're seeing in parts of Asia.
Got it. Let's move to the Middle East for a second. These are big hubs. They're big travel hubs, and I guess what are you seeing there? It looks like similar trends
Yeah.
there as well.
It does. It does. It took a little bit longer to play into effect across that region, and similarly, because so much of that travel is also driven by hubs like Dubai or Doha, for example, that the drop in long-haul travel between Asia, Europe, and the US has really affected that region, and we haven't really seen much of a recovery there. The trends have remained pretty stable over the past several months.
Okay, and then just kind of finishing our round the world tour. Let's jump to Americas, and we've seen significant outbreaks again here, North America and South America. This looks like a similar picture, and maybe there was some improvement later in the summer, but you know, expecting to kind of stay locked down like this as well through the end of the year, with the holiday travel typically a big time. It seems like people are still traveling for Thanksgiving based on some of the mobility data we're starting to see roll out. What's your thoughts there?
So domestic travel looks different, and I think we should talk about that in a moment. But in terms of international travel, very little travel into the US, not a ton of travel out of the US, partly because there are restrictions on Americans entering certain countries at this point due to the situation with COVID-19. So international travel is quite restricted. Yes, we have seen maybe a little bit of travel into Central America, the Caribbean during the summer, but cruises haven't really restarted in a meaningful way. And now with the increase in cases in the US, we expect that tourists will be quite cautious. So any tourism that is happening tends to be much more local and much more domestically oriented. But people are still moving, which we should talk about.
Okay, yeah, we'll get to that. But before I do that, I just a lot of this seems therefore like it's fairly expected based on what we had seen. So I'm curious, when you were doing the analysis on this, was there anything in the data that surprised you when you were looking at the tourism travel trends so far this year?
Yes. Actually, what surprised me was when looking at a couple of different data points. One was this data, which looks at travel dynamics between top 20 country pairs for air travel. So as you can see here, you've got some pan-European destinations between the US and Mexico, etc. Very popular travel pairs. And what surprised me was this data here around Russia and Turkey, where you actually saw growth in terms of travel on a monthly basis between the two markets. What that was, when we looked deeper into the data, was Russian tourists in August specifically being allowed to go to Turkey, going to Turkey in pretty large numbers, relatively speaking. Less fear clearly has played a role in this, but that tells us that travel pair may reopen earlier than others, given these dynamics. So what we're looking for here is signs that consumers might have a more of a willingness to take a risk with their travel, which consumers and to what destination. So that actually gives us a little bit more optimism about, in particular, Russian tourists going into Turkey.
Are there big differences in the dynamics between international and domestic travel? We've hinted at it a little bit in the earlier part of this around the world tour, but I'm curious about this, especially in markets like Asia Pacific, where we saw the pandemic relatively well contained, and you would expect you'd start to see an uptick at least there in domestic travel. But I'm curious what your thoughts are there.
That's right. Yes. So domestic travel has behaved differently to international travel with a couple of caveats here. So if you're looking at air travel, this is air travel data. What you would see in each of these domestic markets this year on a year-on-year basis is very little travel in Australia, which had a very extended lockdown, which worked, because we've seen the numbers of cases being quite low there. We have seen, of course, a reduction in US domestic travel because of the pandemic, but not to 100%. So actually, these numbers look a little bit better. Within Japan as well, some of the more recent data also indicates that there is travel within Japan, including air travel. And even in a market like Russia, you actually saw domestic air travel grow, because these were tourists who were planning to go to Italy or to Turkey or to some other destination. They couldn't do it, and so they traveled domestically. Even the size of the country, air travel is quite convenient there as well. So there's been movement of people domestically, and what you've seen is this being reflected in terms of number of seats available across domestic airlines. Very, very similar dynamics here to what you were just looking at. A number of airlines have been cutting domestic seats as well, but again, it is not at the same level as some of the international travel reductions that you've seen. And what more recently has started to take place as well is that tourists in China have started to travel domestically. And this has been driven by both some stimulus spending as well as increased confidence in the safety of doing so. And that domestic travel is essentially all the Chinese tourists that normally travel all around the world, millions of them, are now maybe looking for domestic destinations, and that's starting to pop up in the data, including through air travel, but of course also train travel and other types of domestic travel. We've seen trends that people prefer to travel by car. They feel safer there. So there's definitely movement, but the nature of spending has changed and has become much more localized. So for markets that are exclusively dependent on international arrivals, that's where that tourism market is really decimated. Where there is a big enough domestic tourism industry, that's where you see a little bit more of an opportunity for displacement.
So that's quite important as our clients think about prioritizing markets, at least over the next 12 to 18 months, while we wait for things to start to return to normal. I am interested. We spent a lot of time at talking about flying, and obviously that's a huge part of this. But you did hint at other ways of travel, train and automobile travel. And so, if people aren't flying as much internationally or domestically, are we seeing driving and train travel? And if so, what does that look like in terms of destination locations and trends?
Yeah, so if we look at the hotels, for example, as a proxy of domestic travel, because it's hard to disaggregate domestic travel between tourism-oriented versus for personal reason or even for work in some cases, what we're seeing is that people are traveling. They're traveling to see family, where that is allowed, depending on the nature of the restrictions from different locations. And in many cases, they're actually traveling less to the big cities, which is quite interesting. So the big glamorous city destinations that have tended to attract either people coming in from abroad or domestically are not as attractive right now. And so people are seeking travel which is more oriented towards smaller towns, less populated destinations. Nature is a very big trend as well. Anything that reduces your COVID risk but allows you to just change location and have a little bit of that that positive impact that comes with just any kind of change at this point. And then similarly, you're seeing domestically that hotel occupancy rates have started to improve in a number of markets. In this case, you're seeing Asia data indicating that people are starting to visit hotels. The locations of those vary. In China, the trend has been a little bit different, where you actually have seen more travel to very attractive big cities, actually, as well as really big tourist destinations domestically. It's been very different across developed markets, where you have tended to see more of an outflow towards the countryside, if you will, or smaller destinations.
What does your gut tell you? Do you think a lot of this travel is personal, like vacation type of travel, or a change of scenery type of travel, or do you think there is the return of business travel happening? I know in our company there's none of it happening, so I'm kind of curious, and we're a global business, so I'm curious, kind of your thoughts on that too.
Yes, business travel. I think we should ask the group in a moment about business travel as well.
But we'll do some polling. Yeah.
We will talk about that. Yeah. Very little of that is business travel. It seems, from what we're hearing anecdotally, business travel is starting to come back in places like China, where having it's a little bit safer, and B, there's an expectation of building that relationship in a face-to-face type of environment, building trust Those are the contexts in which business travel is going to be under a lot of pressure to return. But we should come back to that topic in a moment and also see what our listeners think about that.
Yeah, that's right. And just a reminder, we're going to be doing some live polling. Actually, not a reminder, I'll tell you guys now, we're going to be doing some live polling here shortly. But also, as a reminder, if you have any questions you want to weave into the conversation, feel free to just put them in the Q&A box and address them to FrontierView webinars, and we'll work them in. All right, so we've established our baseline, and now let's pivot to what we can expect looking forward. What are your expectations at the headline level for recovery, and then we'll dig further into that.
So the way to answer that question is to try to understand the psychology as well as the factors that are actually preventing travel right now. It looks obvious, but it is a little more complicated than it seems. So this is why we think that passenger sentiment is going to have an impact, because once you remove the hard boundaries of you have to quarantine, or maybe you have to take a test, although in some cases we've seen airports like Frankfurt Airport, for example, trying to take that out of the equation by offering very fast tests on location. And once you reopen borders and allow people to travel, once those hard boundaries are removed, then a lot of this will be about sentiment. So sentiment is going to give us a directional sense of where, how, and how quickly that is going to recover. If we look at the data a little bit more in depth, what are the factors that might affect sentiment? This was a very interesting survey which looked at a bunch of different countries and tried to understand what people need to see in order to feel comfortable to travel after COVID-19. And very interesting results, because some of it is about signaling, as you can see from the World Health Organization declares the end of the threat. That is, technically speaking, a statement which is going to signal the beginning of the end, but it seems to have a big impact on psychologically how a lot of people perceive the risk. The lifting of those quarantines, that seems to be a really big restriction. And we saw that in Europe, because as soon as some of these were lifted, there was influx of travelers into locations that didn't have quarantine. So the demand is there and is pent up in a lot of cases. And then some people also need to see active infections beginning to decline domestically. That makes a lot of sense, but it doesn't require the epidemic to be completely over. It doesn't require necessarily for people themselves to have been vaccinated. It matters, but not to the majority of the people. It is really more about the general sense of safety and the ability to actually do some of that travel. So there may be a little bit more adventurous travelers out there than we realize, willing to make that jump, especially younger generations who might be perceived as a little bit less at risk. And so there is potential for a little bit more of that uptick in demand. And interestingly, when you ask also what might affect the willingness to buy an airplane ticket, price, despite everything, price is still by far the highest, the most important factor. So airlines can't really use this as an opportunity to raise prices, even though they probably want to. And cleaning policies, of course, make a difference, but realistically, it ends up being getting back to price. And then interestingly, also treatment by airline during COVID-19, i.e. the reputation of the airline and the way it has treated its customers in this very challenging time, also seem to have a big impact on flight purchasing intentions as well.
Earlier on, you showed a really interesting the chart about the travel pairs, the city pairs, and where you saw, and that was your surprise when we had Russia and Turkey. And I guess you had hinted also, and we had seen some rhetoric about this about a month and a half ago about these green corridors and safe corridors. But why aren't we hearing more about that? Where we know that there are certain routes that are incredibly popular and these corridors that are very popular, and it would seem like if you could establish safe corridors that could start to reinstate as part of the ramp back up into travel, we'd start to see a reinstatement of travel into those areas. You think about where we travel a lot, right? We travel a lot between the U.S. and the U.K., or the U.S. and Singapore, or Singapore and Shanghai. These are important routes, or the U.S. to Dubai or to Doha and that sort of thing. So I'm curious why we're not hearing more about that. Is it just too complicated logistically to pull off? Is it too political? Like why wouldn't we see that as the step one of
Hmm.
return to travel.
So where these have made the most progress and yet not been fully implemented yet is in Asia, between markets like Australia and New Zealand, for example, both of them countries with very, very few cases, if any, over the past few months. Um, and then into markets like Taiwan, China, Japan, Hong Kong, but it's been moving slowly. And our judgment on this is that it's out of caution because we have seen some pop-ups of small-scale mini outbreaks in some of these markets over the past few months. Every time another one like this comes up, it slows down the process of what is your level of confidence that you're going to be safe. US and Europe are experiencing such mass pandemics that it's extremely unlikely anybody is going to want to open a corridor with them because they're just not safe. The numbers of people are just too high. Now, there is a question of what if you were to require a COVID test? What if you were to run these on at the airport? Is that going to make this a little bit easier? A little bit like the health passport idea that has been circulated as well, but global coordination has been so poor, and because of that second resurgence in cases in a number of markets, it really puts off some of these decisions
Yeah,
because the
there's a
scale
lot
of
of
it
headline
has
a lot
increased.
of headline risk
Mhm.
with it too. Yeah. Okay.
Yeah.
Um, Before I jump to polling, I wanted to ask just one more question, and then we'll jump into some polling, and then we'll continue on. But do we think people will start traveling as an extension of the habits that they've kind of recently been locked into?
Mm.
All of our current habits that have become the norm for us for the last 9 months or so. Does that start to affect how we travel? We might stay closer to home. We'll do mostly car travel instead of air travel. Um, our travel will be to less populated areas, like you were seeing some of in the evidence of the data you were sharing. Like, what do you think happens there as we start
Yeah,
returning?
so this is the world after COVID question, the million-dollar question, which is coming up in all different shapes and forms. Very hard to know. The only way to know is to ask people consistently about their intentions and then try and compare that with actual fast-moving data. Realistically, this is about behaviors that have no precedent, and so it's a little bit hard to assess. So I'll show you a couple of surveys that just kind of indicate a couple of things related to this question. First is at the very beginning. Now, 2, 3, 5 years from now, people might be very comfortable getting back to their previous travel patterns, and we expect a reversion to the mean in the number of cases. If you look at the travel towards a rural versus urban destination, across different markets, you're seeing actually quite substantial percentages of people willing to make their next trip be to a rural destination. Again, putting a little bit of pressure on the big cities that are typically magnets of that kind of travel, except in China where you're seeing much more of a focus on domestic urban travel. So that's an area where there's quite a bit of a difference, but anywhere from 30 to 50% of respondents across the US and Europe are still intending to travel internationally first. So that pent-up demand for travel outside of your own country still seems to be fairly strong. Second is where would people stay? So what are the nature of their preferences in terms of location? One argument might be that people would move away from some of the more recent models such as Airbnb and others of homestays and move towards preferring larger hotels which can guarantee safety, cleanliness, and hygiene standards at a high level. That does seem to be happening, but in China only. Outside of that, the patterns are actually quite consistent. We are not seeing very large shifts in terms of preferences. And in fact, for long-term stays, you're seeing people who are just renting an Airbnb to work from it so that they're in a different location, even if they're still locked down. And also, some of these are more likely to be in rural areas or in more isolated areas in some cases. So they're benefiting right now from the shift in terms of where people want to stay. So things are moving, but it is not going to be quite as wholesale as what we're seeing right now. And a lot of prior trends are probably going to come back. It just might take this time to get to that point.
Yeah, I was reading last week, I think it was, that some of the hotels are offering day rates just for business
Mhm.
people to go and work in a room and, maybe grab a workout or a swim in a pool and that sort of thing, just for a change of scenery, which is an
Mhm.
interesting model, right? If they're vacant anyway, you might as well turn them into mini WeWorks, if you will, for the day.
Yes,
There's interesting
I mean,
models.
there's very interesting innovation happening for sure. Some of these might stick as long as they are viable financially after the normal behavior of consumers returns. But everybody's having to innovate in this area right now.
With 3 kids and 2 dogs, spending a day at a hotel room sounds like a vacation holiday for me to work.
Yeah, or you have the flights to nowhere that are happening in Asia.
That I'm not sure. That I might not be ready for, but
Potentially.
yeah. So let's try to make this a little more interactive, and no guarantees that the tech will work, but we're going to give it a shot. We have a few polling questions, and we can ask our listeners and kind of react real time. And then talk about what we find, and then we'll come back and we'll talk about the next part of our discussion in terms of outlook. But Martina, do you want to kind of guide us through a few questions here?
Yeah, we have 2 questions for the group, and we will share some additional insight on this as well. But wanted to understand about your company and when you expect that the level of business travel will return to 2019 for your specific business. Is it never? Is it going to take quite a long time, 3, maybe 5 years? Essentially, what would be your best guess in terms of when your firm gets back to current to 2019 level of travel, assuming that we're starting to see vaccination in the beginning of 2021 and potentially a meaningful improvement in terms of the scale of the pandemic by second half of 2021.
Martina, the listeners can just click right on their screen here, right?
That's right, exactly. And the results will not be shared, they will only be aggregated, but you'll be able to see them right away. So you can compare your view with that of your peers on the line. Okay, maybe we can see the results. Okay, interesting. So 2022, 2023 seems to be where the group is landing in terms of consensus. That is pretty consistent with the overall recovery in tourism that we're expecting to see. Maybe just a little early on the 2022 line, but that might actually be an optimistic sign, actually, that the recovery in business travel might be a little bit earlier. If we can move on to the second polling question. Okay. So this one we wanted to understand the type of travel that might be displaced by online tools. We've seen a lot of companies replacing conferences with online conferences, of course, doing all kinds of internal meetings online, as well as having to do sales meetings, both for new and existing clients. Online too. These are not always the ideal setups in which to do this, and so wanted to understand which of these your business feels like actually this is working pretty well and we might want to do more of it, therefore we will travel less for this type of purpose, from the list below, and you can select as many as you like. Rich, what would be your guess for where we're likely to land?
Yeah, I was gonna say, I think it's gonna be travel to meet existing and new customers. I think will be the top 2, and I think it's gonna vary a little bit by sector. I know we can't do that real time right now, but it would be interesting by sector too, because I think if you're meeting customers and you're trying to sell super high priced capital equipment, that's harder to do online, right? It's a relationship, it's a demo sale. There's a lot of reasons you want to be face to face with customers. So, but I think spending time with customers, I know that's what I want to go do. So as soon as possible. So
for sure. Great. So can we see the results?
Oh, I was wrong.
Okay. So you're not actually wrong. I think it's just a little flip. So most likely to be displaced, at least somewhat, by online tools is internal meetings. So all those wonderful company offsites might actually not be happening quite as much as they used to, and much more collaboration online as opposed to traveling to a single location to meet up. And similarly, conferences seem to be having a little bit of a hard time. So some of the hybrid conference models might actually come back and stay based on this.
Yeah, that's interesting. Yeah, so I guess that is the question's the inverse. The answers are the inverse of what I was expecting. So
Yeah,
All
yeah,
right.
but pretty consistent actually. So if we take a look at the data from other sources, because we just need to work with as much data as possible to really get a sense of what's happening. So a couple of things. First is a lot of businesses are still monitoring the situation. There is a vision for 2021, which is a flexible vision, meaning we might pull back or we may resume travel, but it's going to be actually decisions made in the moment in terms of where it is safe, when is it safe, for what kind of purposes as well. So a lot of businesses still in a wait and see type of situation. And it's
Martina, just before you move off that one, I had just
yeah.
one question because I know a
Sure.
lot of our clients are finishing their strategic planning. If they're on a fiscal year, calendar
Hmm.
year, they're finishing their strategic planning. And I'm just curious what we do dozens of briefings a week for clients in their planning process. And I'm curious how they're thinking about budgeting around travel for the year. Are they doing it, are they allocating budget for travel in 2021? Are they doing it in kind of 6-month increments and saying, well, don't see much of it in the first 6 months, but we're going to put it in the budget for the second 6 months? Or are they just leaving it out altogether? How are they thinking about that spend?
So we don't have that level of granularity in terms of budget data, but it varies by region. So when it comes to travel budgets, they are starting to pop back up in Asia, partly because of in Asia where you have the option to do so. So you're really talking about China, but very importantly, because that market is recovering, you don't want to lose relationships. You don't want to be refusing to meet a customer when your competitor is willing to meet with them in person. And so for those teams locally, especially from a sales point of view, like you were mentioning, that requires some investment to sustain the growth targets that a lot of companies are placing on that region. A lot of it seems to be a bit of a wait and see setup, very much based on rolling information that is coming in. But it doesn't seem like any major business travel budgets are being restored for next year, just based on casual observation here.
Yeah, I mean, I know I can speak just for our company. We've kind of broke the year into two halves and said it hard to envision a lot of travel in the first half, but then we start to ramp it back up in the second half. But we'll take it as it comes, kind of thing.
Yeah, it seems to be a popular approach.
Yeah, I think we're all learning to roll with the punches.
Mm-hmm. Yes, and some of this is based on what companies assess as being feasible or not feasible to do digitally, as well as customer expectations. So I'm not going to go through all of this, but there are a number of areas where there's the jury is still out in terms of can you really effectively do this in a sustained way, more than just in a crisis situation online or not. Anything from how do you manage your distributors, who may be challenging to manage even when you were able to travel and see them. Is that really something that you can consistently do online, even though the travel to do so can be quite taxing and also expensive? What aspects of sales can truly really be done online versus have to be in person, as well as anything that goes beyond sustaining existing customer relationships, but really trying to build new ones or innovate on product. Big questions open about the ability of teams to innovate effectively while being physically separated from each other as well. I would say most companies are still really trying to figure this out. There doesn't seem to be a consensus nor sufficient data to prove one or another point. But it is clear that some travel will return because of areas that are going to be very hard to sustain in an online environment. And if we look at a little bit more data on what companies are saying they're planning to do, as you can see in this survey, which was done across a bunch of different markets, about 60% of companies were planning not to reduce or increase their travel relative to prior levels after the pandemic, especially when air travel is required. It's true that about a third were planning to travel less, but that is different from saying nobody will ever travel for business again. So it tells us that the pace of recovery will be slower and there will be a certain piece of the market that might just go away completely, but that is not going to be the majority of the market. And the other thing that we're also seeing, which is interesting, is the ability of employees to have a say in this a little bit more perhaps than they had in the past. So given the pandemic and given some of the health risks associated with travel, which may linger as a perception for longer than just the next few months, it seems like companies are also becoming a little bit more open to negotiating with their employees on what kind of business travel is really required or not. So there may be changes in workplace policy coming from this as well.
Absolutely. All right. So with all this now taken into account, what let's turn to the regional review again, but this time with an eye towards recovery and when we think what the pace of recovery looks like, and when we might get back to our pre-COVID levels, region by region. So take us on a tour again.
Sounds good. So at a global level, there are two organizations that are doing scenario building on this specifically. This data is from the UN World Travel Organization, which have been updating their scenarios for quite a while. You can see that we're somewhere in between their scenarios 1 and 2 currently in terms of the pace of recovery as it relates to this year. But even their most optimistic scenario is expecting a recovery this year to minus 20% year on year. So definitely not anytime in the course of this year. We're probably going to end up a little bit lower than that. In terms of the timeline, again, working with scenarios, essentially we're looking at somewhere between 2023, 2024, depending on a number of factors, which are quite varied, of course, depending on the development of the pandemic and the lifting of travel restrictions, as well as customer willingness to travel, with a few caveats that segment by segment, as well as geography by geography, this looks a little bit different because domestic travel likely to recover faster, especially in markets that have effectively been able to contain COVID-19. Travel within Europe is probably going to recover pretty quickly based on what we saw during the year. So that might be also on a faster ramp-up trajectory. Long-haul travel, business travel, much slower, right? And so each of these segments will have its geographic implications and also its slightly different trajectory in terms of getting back to normal. From a geographic
Martina, before you jump into Europe, I just had a quick question about the analysis behind this. I know it's from the UN World Travel Organization, but do you know how much of it is? A lot of it seems to be demand driven, but also there's a huge supply side issue here, right? This like mobilizing airline routes back to the levels as well doesn't just, it's not a flick the switch and capacity comes online and the staffing and the labor is all there. There's a ramp there as well. So as the demand picture improves, the supply picture needs to stay with it or even stay a little bit ahead of it. Has a lot of analysis gone into that piece of it?
Yes, we're not showing it here, but yes, we have looked at the question of resiliency of airlines in particular. Some have been bailed out effectively, others are. There will be some airline bankruptcies. I think that is inevitable given the scale of the crisis. Interestingly, it might be at both sides of the market. So struggling low-cost airlines that were maybe not really able to sustain their business model even before, probably going to go out of business. We've seen a little bit of that already. And also some big ones.
In Norway, right? The Norwegian shuttle.
The Norwegian is a good example of that. Yes, exactly. So where governments play a role in here is really creating winners and losers. There's going to be some consolidation in the market. There will be also some probably price implications of that. But it's a little early to say that we should be expecting a massive increase in prices because the recovery will be gradual. People might still be choosing low-cost options where they have them. They may even choose their destination based on price for a period of time. So the market will probably balance out without drastic price increases based on current trends.
Yeah. Okay. Thank you. Sorry. And let's go back to, we'll start with Europe.
Yeah, so within Europe, again, expecting recovery close to 2023, but already next year, especially in the second half, probably in the summer season as well, if we see vaccination effectively rolled out, we should be seeing a year-on-year reduction, but or year-on-year growth, but still reduced relative to 2019 levels, but not nearly at the levels that we saw so far this year across essentially all of the continent. And by 2022, with the exception of certain types of travel and some business travel across Europe, which also has been very popular, you might be feeling as if things have gone more or less back to normal there.
I mean, in a way, when you look at, just back on that slide, you look at those numbers, you're effectively saying we get back to normal 2019 levels by 2023, but
Hmm.
essentially we're doubling each year from the prior year. So the year-on-year growth is almost 100% if I, just eyeball this chart,
Hmm.
which is pretty significant kind of V-shaped recovery from
Hmm.
each year. Yeah.
It is true, yes. And again, Europe is a little bit more optimistic in that sense because we see a lot of willingness for people to travel within the continent itself. Now, how long would it take for large numbers of Chinese tourists to come to Italy, to come to France? That's a little bit of a different question, right? Because
Yeah.
that long haul travel might actually be much slower to recover. So that has implications for duty free, has implications for shopping locally, for certain types of destinations in particular as well. And all of that needs to be modeled into corporate plans as well.
Yeah, I want to come to that topic here in a little bit once we get through the around the world tour.
Okay. Across Asia Pacific, here looking at inbound tourism volumes in terms of growth, expecting to see definite improvement in 2021 as a result of some of the dynamics that I've described so far. And as you can see, similarly, pretty robust growth into 2022, 2023 as well, about 2 years to get back to 2019 levels. In the Middle East, again, we're landing somewhere around 2022, 2023 levels of normalization. Long haul might take a little bit longer, understandably so, because of those very long distance destinations. But within the region, we expect to see a little bit more of a faster uptick in terms of growth. Across Africa, which is not a massive destination in terms of travel anyway, we have seen less of a reduction as well as potentially a reasonably fast recovery, but it's a region that can use a lot more air travel. So what you should be seeing here is really rapid growth, and in this case, you're seeing a normalization relative to this year. And also, again, similar dynamics across North and South America, expecting to see a strong rebound in North America, US and Canada in particular, followed by the rest of Central and South America as well. So there is a path towards normalization and recovery, but it is going to take at least a couple of years to get there.
All right, so now as we approach kind of the end of our time together, I think the most important thing we can take from all of this is this what we like to call that so what, now what. So what are the implications for multinationals selling into the sector? The broad sector as defined, which we said up front, is 10% of global GDP. It's a significant part of the global economy. What does this all mean in terms of prioritization and how to think about planning? So we'll start maybe talking about companies that sell into the point of arrival as well as duty free. I know that's a big chunk of our client base that has been hit really hard. So how do they think through that?
Yes, absolutely. So again, it's multiple levels of segmenting and slicing up the market, which is why some level of new research on this topic for companies that are trying to model it is going to be helpful. But essentially, any destinations that are heavily dependent on long haul travel are going to have a slow recovery. So better to focus on areas that have a robust domestic market where a lot of the travel is from maybe neighboring countries, so it can be done by car, for instance, or doesn't require flying as much, and that is where we expect to see a little bit more of that uptick in opportunities. When it comes to selling into the hotels and the hospitality companies that are in location serving those travelers, might be good to balance out that portfolio, not just with the typical big city destinations and also the big chains, but also looking for ways to enter maybe smaller players that are located maybe to serve local tourists, maybe some of those players that are serving the more of the rural tourism. Some of that desire to be out in nature is probably going to linger in for a while, even if not in these volumes. And so diversifying the portfolio of customers there and not just going for the really large ones, as efficient as they are as key customers, might actually give some options to offset this. And then also the opposite trend seemingly in China, definitely something worth investigating further if there is a strong consumer preference for the perceived safety of name brand hotels in China, then we expect to see strong demand for that next year. Definitely want to be in that space. And then duty free, Very tough still. So even though we're seeing signs of uptick and improvement, because of the both reluctance of tourists to maybe engage in certain types of activities, roaming through stores, trying products, etc., and also the fact that they may be doing less layovers, they might be more preferring direct destinations, duty free is going to be quite slow to recover. So that's where we're seeing really benefiting in 2022, 2023 from that growth, as opposed to in the very short term.
And you mentioned in here suggested actions for duty free around new business models. Are you hearing some creative models there?
Well, to an extent, yes. Some of that is linked to efforts to move duty free to make it accessible to consumers in specific locations. So China has opened some new duty-free locations domestically for those domestic travelers. We haven't seen too many other countries necessarily do that, but it is clear consumers anyway prefer a certain level of convenience in terms of their shopping at airports, so they don't have to carry it or they take it back on the way when they arrive. And so areas of engaging consumers through e-commerce where that is within the legal framework are definitely areas of further investment, especially because they tap into the bigger e-commerce trend as well.
Yeah. I mean, I think that'll be a really interesting area to keep an eye on if there can be some sort of blending of e-commerce with the duty-free benefit and convenience factor. All right, what about companies that sell into other participants in the travel supply chain? So, the whole ecosystem feeding into airlines, airports, hotels, car rental businesses, the whole travel and tourism ecosystem. How does that start to look?
Yeah, it's a complex question, so I'll highlight just a couple of things on this. But when we looked at, and in the report that we have in our system, we have more data on this in terms of airport capacity and what's happening there. Most airports are below capacity. They're probably going to still remain below capacity next year as well. And so for companies selling services to them, the demand might not be quite as strong. There may be some airports that might recover a little bit faster. We've highlighted a couple here just based on what the current data is showing us and also what the likely trends are in terms of recovery. But we know that demand for safety and hygiene solutions will remain high. So some of the practices that have been implemented now very likely to stay in place. There will be segments as a result that will grow even if the number of passengers doesn't quite catch up for a little while longer. When we look at things like car rental, for example, actually demand has picked up in a number of ways. So there are some opportunities to capture that. In particular, less linked to business travelers who might be renting cars, but actually working with firms that are serving more of the domestic travelers who are looking for quick and flexible car rental solutions. Those companies that are able to capture that are probably going to be able to grow faster. When it comes to selling services to airlines more directly, we've got a lot more analysis on what's happening within the airline sector in the report itself. But it is likely that besides hygiene solutions, a lot of them are going to be very price sensitive for quite a while and would be looking for potentially their volume of demand is going to be lower given that they have taken seats offline. Not all of these will get back. And so really trying to find strategic areas for partnership with them is going to be the way to go because so many of them will be under financial pressure for years to come. And then when it comes to aerospace, that has a knock-on effect on demand and production levels in that sector as well. And as you can imagine, by the time we get back to growth and historical growth patterns in terms of air travel, you're looking at 5-7 years. And so demand in the short to medium term in this sector is likely to be reduced as a result of the hit from the pandemic.
And so there's more maintenance of existing aircraft, especially as they start to bring some of the ones that have been perhaps put on hold, bring them back online. There's going to be needs there.
Yes, exactly.
Okay, I'm watching the clock here, but I did want to try to squeeze in at least one or two more questions as we wrap up, Martina. So one of the big reasons for travel is to attend. Sometimes we talked about conferences, but there's also massive events, and one of the massive events that has on the horizon is the Olympics, and in particular the Tokyo Olympics. And I'm kind of curious what you're seeing or hearing in terms of expectations for the Olympics next year, in terms of, will they happen? Will there be tourists and fans at the Olympics? Because I think to some extent that's the next big thing that's likely to be watched, right? Because everything else will flow from that, other big events that occur around the world.
Yes, good question. So our Japan scenarios have two different scenarios for the outcome of the Olympics. So far, officials insist that it is happening next year. And we're going with that scenario as our base case, but with a bunch of caveats which have direct implications for travel and tourism, because our assumption is that not all events may take place. So in total, you might have fewer athletes traveling. Although if we are able to vaccinate them quickly, the number of events might increase. So it might depend on the effectiveness of that distribution. But the audience is likely to be socially distant and mostly local. Given how cautious Japan has been, it's very unlikely they will allow large numbers of tourists to enter for the event. And frankly, the timing may not be right to have a ton of people willing to take a trip all the way to Japan for them. So even though the Olympics may take place, the economic effect and the tourism effect from the Olympics might not.
Yeah,
likely not to.
Yeah, and that's a big part of the math for why you want the Olympics anyway, right? Like, I mean, the economic justification of it all. One other one on a big event. One of our listeners was asking about the Expo view on the Expo 2021 as well.
Yes, so again, we work with scenarios because some of these things are uncertain, but Expo is in October, starts in October. So that gives us a little bit more time and confidence to say that it is likely to take place, but we actually expect more tourists to arrive or more visitors to arrive to Expo in 2022, kind of in the first quarter of 2022, in the second half of the Expo period, whereas the arrivals in the early stages of the Expo are likely to be lower, definitely lower than what the Dubai government has been planning for. So reduced capacity, we are definitely not going to get back to whatever the assumptions were before the pandemic, but we expect to see a gradual ramp up in terms of arrivals, really affecting 2022 numbers though.
Okay, all right. I think we're up at time. Martina, as always, we could go on for much longer, and it's a fascinating topic, and it's one I think we'll continue to try to keep front and center as more information comes out. You've built really strong analysis and frameworks that we can keep an eye on for our clients as we go forward. So thank you for taking the time to do this this morning, and again, I think the timing was perfect. As a reminder, FrontierView clients, you can speak to Martina or any member of our FrontierView research team at any time by scheduling a meeting through your client relationship director. And all of our FrontierView research, including this report on global tourism in 2021, is available, including all of our data and analyst insights on the FrontierView desktop and also our mobile application. So with that, I'm going to conclude today's webcast, and we wish you all the very best and look forward to speaking with you again soon. Be safe, everyone. Thank you.